Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. A Monday morning, the week has started on a positive note. It's a truncated week as well. So a lot of action which is expected. Also, we are towards the fag end of the earnings season now, Vivek.
That's the only positive news as far as this particular week is concerned, along with the fact that it's a truncated week. We've come off 6 straight weeks of decline as far as the Nifty is concerned. So the street would have anticipated and hoped for a green start to the week, and that's what we are getting. Sharp recovery from the intraday lows. But we have a lot lined up on the show today, an important corporate conversation as well. So let's start off with the top headlines. Market near day's high as stocks spoke up on hopes of some forward movement in resolving tariff issues, even as calls for domestic reforms rise. PSU Bank and Realty are key gainers, while consumer durables track mid-caps gain.
PG Electroplast tells CNBC-TV18 they were operating at over 100% capacity till early June with strong orders on hand before demand fell off a cliff, catching them off guard. And while inventory remains a big issue for now, the company argues the future trajectory won't be altered by one bad season.
Sun TV in focus after all legal notices issued by family members to promoter of the company have been irrevocably withdrawn. The company gains nearly 5%.
DEE development gains after reporting its Q1 numbers. Revenue surges 21%, while EBITDA has risen 45% versus last year.
Equitas Small Finance Bank under pressure after a muted Q1. Net interest income, pre-provisioning operating profit all fall, and also asset quality deteriorates.
All right, these are the top headlines that we are tracking for you, but this is our segment Midcap Movers. We have Hormuz who's taking us through the midcaps that are moving around in trade today. Hormuz.
Well, after 6 weeks of losses, you were expecting a bounce. Started off the week on a positive note. We hope that it sustains, at least the bulls would. Look at the midcap movers here today. Hariom Pipes is up 15%. And there are a lot of movers that are seeing double-digit gains today within the broader market space. GE Power is up 13, Uniparts is up 12. Transformers and rectifiers had a very choppy last week, but it has started off this week on a positive note at the highest point of the day, 8% higher on that stock. Now, the positive earnings reactions, Yatra Online is in a 20% upper circuit as it has been almost for a better part of the day. Look at HBL Engineering, look at Domes, look at DE Development Engineers, came out with numbers just recently, and all of them seeing gains of anywhere between 10 to 14%. On the flip side, though, does not look good for stocks like Entero Healthcare Solutions. That's at the lows of the day, 7% lower there. PTC Industries is an earnings reaction, as is Voltas. But of course, Voltas is bearing the brunt of the industry-related sentiments as well. And in the newsmakers of the day, of course, can't not talk about PG Electroplast, seeing some bit of a recovery from the lows of the day, but still down around 14%. Amber, Home First, of course, after the block deal, and Akzo Nobel. Part of it is also trading ex-dividend for 160 rupees of a special dividend that was announced. And lastly, stocks that are moving on the volumes front. And those names include the likes of Afcon, Sun TV, and TVS Supply Chain, some of the movers in the broader markets. Back to you guys for the Amphi data.
Okay, all right. Thank you so much, Hormuz, for joining us with all those details. By the way, the net equity flow is at a multi-month high. I would say it's an all-time high as well. 42,672 crore rupees in terms of equity inflows, which compares with 23,567 crore rupees. You know, in this fiscal itself, so far, we haven't seen this number. I have data from June itself. June last year was 40,573 crore rupees. Then we had December at 41,136 crore rupees. Apart from that, it has been ranging between 24 to 30,000 crore rupees. So this 42,000 crore number is a big surge that we have seen, multi-month high that has come in for the equity inflows as well. So big surge there on a month-on-month basis, of course. In terms of large cap funds, let's quickly take a look at what the inflows there have been. It is coming at 2,125 crore rupees. It compares with 1,694 crore rupees. So even that number is quite impressive if we look at that number, because around that 2,000 mark, that's the number we saw in March and April. So this also explains this is not led largely by large caps. It will be led by mid caps or small caps. That number should also come up for you on the screen in just a bit. But for now, large cap fund inflows at 2,125 crore rupees. Of course, it's an increase, but it is lower than the numbers that we saw in Jan, Feb, in March. Of course, at that point in time, we saw a different number as well. So here you go. Small cap fund inflows have come in higher at 84 crore rupees. And I think even this is a number which is higher. We have not seen the 6,000 number in a long time. Yes, that's right. The equity inflows this time around led by small caps and mid caps as well. Both of these segments have done really well. Even that 5,000 crore mark for mid caps we haven't seen in a long time. So higher mid cap flows, higher small cap flows. We'll have to see how hybrids are doing as well, because when markets started declining, we saw that major shift coming in to hybrids, people making a choice which has all the forms of investment asset classes. So far looks like a decent improvement that we have seen. Liquid fund has seen as an inflow as well. That's also happened because we saw savings bank rate go down. So liquid funds are where people were parking their regular money for higher returns.
And this is despite in all the weeks of July, you've actually seen the markets go lower.
Yes, of course.
So when you take that particular data into account, clearly indicating that the kind of selling that we've seen, especially from the FI, especially post a muted Q1, if you could call it in terms of an earnings season, you've seen inflows across all of the asset classes, across all of the equity mutual funds actually go ahead and significantly rise on what was a quite strong base of the month of June. So equity funds, 42,672 crore is the number that we are seeing. The net equity inflow, like you just mentioned, has almost doubled on a year-on-year basis. ELSLs, fund outflow marginal, but the important point is when you're looking at the mid-cap and the small cap flows, that's gone up quite significantly. And resultantly, despite a muted market performance or equity market performance, what's actually transpired is that the total AUM of the equity market has actually gone up on a year-on-year basis. Again, something that is quite positive.
It is something that tends to happen, right? Whenever we do see flows increasing, and SIP number has been at record highs every month. Last month, it was around the 27,269 crore mark. Let's see which way things go this time around. But as you pointed out, 6 weeks of continuous losses in the markets, but we've still seen inflows coming into large caps, mid caps and small caps as well. We'll just look at the numbers in greater detail and get you more analysis. But for now, it's an improvement for sure. Let's get in Akhil Chaturvedi of Motilal Oswal Financial Services joining in now. Akhil, good afternoon. Thank you so much for joining in. What do you make of the numbers? Despite the decline, we have seen improvement across the board when it comes to different segments. Can you give us your sense of what led to this improvement? Which are some of the categories which continue to do well?
Yeah, so I've just got hold of the numbers. I think the numbers are looking, pretty exciting now. From the previous month, we did about 32,000 crores, so it's 10,000 crores more in equity in terms of net sales. So clearly, I think what we sense is that investors are trying to benefit from the volatility in the market and trying to, invest as the markets are giving opportunity. And that's the sense we broadly get. But the numbers are very, very exciting, honestly. And it's a very positive change that if markets get volatile or if markets correct, then investors actually take a positive view and try to benefit rather than what used to happen earlier on where redemptions used to go up. So pretty positive numbers.
Akhil, this time around, we did see, in the last month, we did see that inflow falling in the sectoral funds, in the thematic funds, and lower NFOs as well. But this time around, we have seen an improvement. New fund offer inflows have been around at 30,000 crore rupees, sectoral funds at 9,000 crore rupees. Is this just the start of a new wave of inflows into sectoral and NFOs?
I'm not sure. It's early days. Honestly, I have to see the breakup of the numbers category-wise.
Right.
But I think we need to wait and watch maybe some themes, such as manufacturing or defense. I think these are some of the or digital, some of the categories where investors have taken interest. But I've yet to see the breakup, honestly, to make any comment right now.
Absolutely. Akhil, we'll wait by and we'll get more comments from you a little later once the intricate details are out. And we'll also wait and watch for the monthly SIP number, whether that has sustained similar to last month's level or whether there could have been a slight bump up over there as well. But we'll now slip into a short break. The management of D Development Engineers joins us next to discuss the Q1 and FY26 outlook. Welcome back to Midcap Radar. Well, one stock from the broader end of the market and one company that delivered very strong Q1 numbers just a couple of hours ago was D Development Engineers. Now, this particular stock, post the results that came in at around 11:30, the stock has surged almost 15%. We are now joined by the management, Krishan Lalit Bansal, the chairman at D Development Engineers, to explain the numbers to us and the way forward. Thank you so much, Mr. Bansal, for joining us. First up, quickly, if you could tell us, what exactly worked for you in the quarter gone by, what led to the sharp increase as far as EBITDA margins is concerned, and a few hygiene numbers. What was the order inflow, and what does the current order book stand at?
Yeah, thank you so much. Thank you so much. So let me begin with this thing that we really had put up a good show in quarter one. Major reason for that is that we had a very solid order book in hand, and the things which had been anticipated, they are moving exactly as per that. The new facility is almost ready. We are likely to announce the major expansion of that also very shortly. And, of course, the new facility, which is already operating, and it has started giving us dividends, which has helped us to improve the numbers. And at present also, the order book in hand is more than 1,230 crores, approximately, I'm saying. So, we are quite secured for the full year, and, whatever projections we have given earlier, we are absolutely on track as on date to maintain that.
Okay, so Mr. Bansal, two-part question here. Can you reiterate what the growth plan or target for FY26 is in terms of top-line growth and margins as well? And second, when you say the new facility has started contributing, and that is something that you saw in this quarter, what was the total contribution from the new facility? How much do you think it will contribute by FY26? And has it come at full capacity utilization? If not, at full capacity utilization, what kind of contribution will it make?
The anticipation was that we should be doing almost around 200 crores from this facility in this fiscal, and we are all, I will say that almost on track to maintain that with almost I will say 50 to 60% capacity installed, and when the full capacity is installed, we are targeting around more than 300 crores of revenue from this particular facility alone, and this is what it is.
So it will be in this year itself, you will do 300 crores?
This year we shall be doing more than 200 crores out of this facility, because this is not fully commissioned as yet, and we are operating. We have been able to commission the capacity of almost around 60% of the total capacity, which is likely to be there.
Okay, Mr. Krishan, first up, just a quick clarification. The new facility that you're talking about is the Anjar facility, right? And did it come on stream in January? You said last time there was a bit of delays due to the early months.
No, that January is, for our new unit, which is for seamless pipe plant, which we are putting it over there. But
okay.
Fabrication unit, which we are constructing from last 2 years, and we commissioned the first phase, I think about 9 months back already. So I'm talking of that. But that also is on track that within January, we shall be able to commission that seamless pipe plant also fully operative.
Okay. So, one more question. You said that currently you're sitting on an order book of close to 1,200 crore. So with that order book, what is the kind of visibility that you have? Does it extend beyond FY26? And when it comes to new order inflow, Q1, what was it? FY26, where do you expect, or what kind of ordering are you expecting to book?
So we were able to book almost around 320 crores worth of orders in Q1, and also build almost the same amount. So, practically, we had set a target that we shall be keeping our order book above 1,000 crore at any given time, and we are well on track for that. And out of this 1,300 crores also, we shall be carrying forward at least 400 crores worth of orders from that itself. Plus, with many orders are in the pipeline, and the projections which earlier given are absolutely on track. Again, I'm saying time and again, but we do not see any reason that the order inflow should hamper or it should slow down. The things are moving exactly the way we had planned, and with all the things, other things in place, we are quite well placed to have a very robust year-ending results also.
You know, the last time that we had spoken to you, you had indicated that gross margins were under pressure because of the order mix that you had. But this time around, there's an improvement in gross margins to 67.6%. Your margins have improved to 16% versus 13.4%. What is the order breakup currently? The new orders that you're getting, are these high margin orders? Will you be able to do the quarter 1 margins of 16% in FY26 overall?
Yeah, that's the target. Our target is even more than that. What we have projected is.
Can you quantify that for us?
No, we have been saying that we should be hovering around anything between 18 to 20% of EBITDA margin. We have been telling this right from the day one, and we are still maintaining that. And our Q1 is always on a very, very leaner side. And we start picking up after Q1, so our Q2 is likely to be much stronger than Q3 than Q4. Last time we were down in Q3, but that was an exceptional thing. This is not going to happen this year under any circumstances.
Okay.
So that's the case.
Okay. A couple of questions, Mr. Bansal. First up, EBITDA margins. Earlier you had mentioned that you're targeting the 20% range, 16% currently. End of FY26, where do you expect that? And secondly, post IPO, one of the reasons you had done the IPO was to reduce debt. So where does the current debt stand at, and what are the debt reduction plans, especially the kind of capex that you have lined up?
The debt levels have not increased. We have not gone in for any new debt per se. So exact numbers, I'm sorry, I don't have right now. But what I can say broadly is that, the numbers have not increased. Debt has not increased. The utilization of already sanctioned debt might have increased, but at the same time, there has been repayments also. So I don't think there would be any increase.
Mr. Bansal, what is the absolute debt currently?
Pardon?
What is the absolute debt number currently?
It should be around 300 or 400 crores. Again, I'm saying I may be wrong in this, so I really will not be able to.
So, do you have any plans to reduce debt this year itself? What's the plan with cash flows?
The cash flow, there is a substantial increase going to happen in the cash flow, but since we are still in the expansion phase, we are still going to invest in the pipe plant also. Otherwise, all other major capex is over. So the overall, the capex at the end of the year will be slightly more than the previous year. This is what I can tell you.
Okay. Mr. Bansal, thank you so much. The street clearly likes the kind of results that you've shown in Q1 and the commentary that you're giving for the rest of FY26. We'll expect more numbers from you when you join us next time around. Thank you once again for joining us. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. We're looking good for the markets. 150 points higher on the Nifty currently. Even the mid-caps are outperforming. 0.6% higher for the mid-caps as well. So it's closer to the day's high as well. It did see a dip around 11:30 a.m. But since then, it's been a one-way move on the markets. A couple of stocks that you should keep on your radar. SP Apparels. There's a sudden spike on this one. It's up around 13.5% suddenly. Remember, all these textile stocks have been in focus since the news of those tariffs coming in from the US. The other one is Paytm, or 197 Communications. That stock is up 3.5% as we speak. That stock also is at the day's high. The mutual fund data flashing for you at the bottom of your screen. But for now, we'll take your leave on this edition of Midcap Radar. Our special show, Finding Alpha, is up next.